price climbs back to record highs, peaks, and retraces. Big gap down, providing the outline of a well-defined resistance zone, which will be based on the opening and closing prices of the large candle just before the gap. Along with the round 150 level, add trend lines based on the highest closing and high prices for a good idea of when and where rising price can likely be pushed back down. All this tells us price can at least enter the resistance area and likely make a brief pass of the lower 142.62 level, possibly contacting the round price of 143. Then, with the downtrend lines crossing through the resistance zone, getting back over 148 and especially 150 become less likely. There it is, contact just over 143, close to the time the trend lines intersect with the lower boundary of the resistance area. The resulting drop is swift and significant. Going all the way down to the first major landmark of the gap, down candles open price close to the round 125 price level. And that's how a combination of conditions in the long, medium, and short term can contribute to a higher probability setup, resulting in a substantial correction to the long-term uptrend. For more on the charting methods used, these and other charts, follow Ascencore. Thanks for watching and have a nice day.